Good morning, good morning, good morning, good morning. Bum, bum. Trades are going so far so good, I'd say. We got some Euro and some Aussie trades on, and the Euro trades I got on are up like 80 pips. Pretty happy about that. Go ahead and let me know what your trades are like right now, and we can go ahead and cover them in the charts. You can leave them as trade requests, and I'll do some interpretations on those charts. So, yesterday came out as expected for FOMC. In Discord, actually, I'll go ahead and buttress quick. So, in the Discord, when you join, you get these notifications. And this is the summary of some of the things that I've been posting as far as research goes. So there are 4 outlooks and reviews of what happened yesterday during FOMC. The major event is ECB today, and then I tell you what I anticipate. Then you have this outlook here that we'll be going over on Euro area growth. And then there's a short, like 3-minute video that Westpac posted talking about how they see inflation not doing so good in Australia. And for a country like Australia, you really need that inflation to come through to help fuel their growth economy. And then I just leave a little reminder here, this very, very last one. And by the way, when you click on these, it takes you directly to the thing that I'm talking about. See? International Economic Outlook by Wells Fargo. If you're new to reading outlooks, I recommend at least reading this one. And look, it just takes you directly to the Outlooks channel. And then I posted some stuff also in the risk management. There are these videos by Vsauce. And I've watched these videos when they first originally came out a while ago. They recently just got recommended to me again. And so I put them in here because they are very, very good practical demonstrations of very important ideas in managing risk. So if you want to be entertained for about 10-15 minutes on YouTube and be productively educated, come down to the risk management channel here on the Plan the Profit Discord. Check out these last 2 videos and also some of the other stuff here. Last stream, or a stream or 2 ago, I talked about this one article here by 2 quants called Are Multiples in Expectancy. I highly recommend looking at this because this is a practical breakdown of why you need to make sure, just at a fundamental level, that you are limiting how much you are losing on your trades. I mean, guys, it's pretty straightforward. You have $1,000 in your account. Don't risk $100, $200, $300 on a trade on the very first go. You're probably gonna blow it up. You know, that's how you very quickly ruin an account. Okay, so the link to this Discord's in the description. And now I'm real quick. I'm not gonna go and read through every single one of these things. But before we get into the charts, I'm going to just go over these summaries. So then we have some baseline expectation and understanding of how these large institutions that manage billions of dollars think is going to happen for the FOMC. There is actually a common thing here. I've read these before the stream today. And Wells Fargo thinks that they're probably done. That today, that the yesterday's FOMC rate hike was the last one. And I believe that was also sell expectation. We stick to our view that July's rate hike is the last one. So you have SEB and Wells Fargo saying that it's the last one. And then you have RBC, which is a bank out of Canada. Bottom line, our near-term economic outlook is more pessimistic than the Fed's, and inflation has shown substantial swings or signs of slowing. But the Fed is clearly willing to push interest rates higher again if inflation were to show signs of reaccelerating. And I agree with the concern here by RBC. In fact, one particularly vocal group, Hedgeye, right? Keith McCullough, does a lot of analysis on markets. I don't know if you know, but I follow Keith. And one of the things that he's pointed out is, hey, because of the recent US dollar weakness, that's causing some commodity prices to reinflate. And that reinflation of commodity prices can then go into the costs of goods sold in businesses, which then means either businesses have to eat those new increased commodity costs and lose out on their margin, or they need to pass on those costs to customers in the form of price increases. So that is the root cause of why there's even any discussion of inflation possibly reaccelerating in the United States. So this is a real thing that could happen. However, it's really something that would only maybe be materialized and realized over the next 2 months. Really, we're only going to see any sort of confirmation of an increase in inflation over the next 2 months. So in the meantime, it looks like we're going to continue to see a more risk-on narrative in the meantime, but it's still on uneven footing because you're seeing all these other things. For example, there's this outlook I also got from Seb, and they're doing all this analysis on the PMIs. You guys remember what I was talking about yesterday? The PMIs, that huge. You know what? Let me go to the Discord like I do. Let's see here. Oh yeah, just this link here. Flash PMIs signal further cooling the development of world economic growth in July. Written by the guy who's in charge of manufacturing and running the division that creates these PMIs for the entire world, Chris Williamson. And then here's his entire summary for the G4 countries, which is Japan, the United Kingdom, the Eurozone, and the US. And Seb is looking at this guy's analysis. Seb is looking at that guy's analysis and saying, hey, those are risks that we are going to take on more seriously. The falling economic growth story can still lead to substantial slowdown, even if you're also getting a slowdown in inflation. Plus, with the euro area particularly, growth and inflation are probably going to fall more rapidly than compared to the United States. So there's still a play here where if the ECB continues to be aggressive in their rate hikes, and, you know, they're expected to do one more 25 basis point rate hike today, and that'll generally be supportive for the euro currency because they still have some growth in their current economic releases, right? Their current absolute level of economic growth is still above a baseline threshold where if they did one more rate hike, they're sure going to hurt some of their growth, but it's also going to kill over a bit more of the inflation. However, there's a lot of analysts who are going to tell you, hey, most of that inflation story is already done and, you know, packed into the story. Hold on, I got to close something here. Okie-doke. I just want to switch over to the charts right now. Yeah, that's not the right one. That's not the right one. Yeah, that's not the right one either. Trading view. Why won't you let me switch over? There we go. I had two trading view windows open. One for streaming, one for, trading. Okay, let's go here. I'm going to check out live stream chat. Looks like the Fed's going to continue to quantitative tightening in the foreseeable future, meaning dollar strength. Look, on a relative basis, if growth in the United States stays higher than in Europe and the Federal Reserve stays on its quantitative tightening regime, then yeah, it would make the dollar significantly stronger. There's not a whole lot of institutions that are forecasting a super strong dollar over like the next 3 months. However, when you start looking at institutional outlooks going out 6 months to 12 months, all of the recession expectations that have failed to be realized for this first half of the year in 2023 are now getting pushed out into November, December of this year and on into the second quarter. So there's like this 8-month window that people are still saying, oh, we could still see a recession, we could still see a slowdown. And now I'm listening and I'm also hearing counter commentary on, we're really going to roll over those guys once they see how strong the whole world economy is going to get. Gotta share is that a lot of companies actually are not. Pretty big deal that this company's declaring bankruptcy, actually. So this is Freight Waves. This is a news organization that follows U.S. freight. So that's like trucks and trains. And Yellow is a big carrier of freight. And they're probably going to announce bankruptcy. On Wednesday, their last day should be Friday. And by next Monday, they're going to declare bankruptcy. And they're the third largest LTL. I forget exactly what LTL stands for. Let's see here. Third largest LTL company. If I go ahead and I just highlight, Google search real quick. Whenever you have a misunderstood word, all you got to do is do a quick little Google search. Yeah, they're just the type of trucking company that moves multiple products from multiple different companies. So let's say you have Costco and Walmart and Amazon. An LTL company is someone who will take freight or load from multiple different groups. And they have 30,000 workers and they're going bankrupt. So, and then I found some YouTube clips of people talking about how freight and the current warehousing situation is for most warehousing and freight businesses is right now and what the outlook is. And they're saying, we're trying to build up inventory right now, and it's very hard to build up inventory because everything is super expensive as far as freight goes. Freight prices are very, very expensive, at least in the US. So I'm going to be educating myself on that whole topic, and hopefully I'll have some smarter commentary around it, but I'm kind of getting enamored by US freight. Interconnected freight is in the whole US macroeconomic system. I quite enjoy delving deep into those sorts of topics because, you know, if you look at it, and by it, I mean when you look at me going over those articles, right? All those from all those banks and from that freight company, it's like, oh my God, what are you doing, Joe? How is this related to our freaking trading? Is that most of the time it's not immediately applicable to a trade. Now, the ticker for that company is Yell, and you can just see, if I had been aware of the shitty conditions with how trucking have been, this has been a phenomenal short trade, right? It's just been going down, and it's had pretty low volatility outside of these jumps here, but it's just been going down and down and down for like the last 2 years. So outside of this spike here and this spike here, it's been getting totally crapped on. And you know what I think? I think the same people behind GameStop are also behind shorting this, right? I would not be surprised if Citadel had big short positions here on Yellow. I would not be surprised. But Yellow has a lot of infrastructure in the US, and if we're trying to discuss economic growth, a big part of economic growth is trucking. So when the third largest, when a very, very large trucking company goes out of business, and then I go and I educate myself and I listen to some podcasts, and the people on those podcasts whose whole life is this industry tell me, oh, when this company goes under, people are all right now, there are other companies already making countermeasures saying, okay, we can take this cargo from Yellow, we can take that cargo, but we can't take this cargo. Like, people are already planning out how to divvy up this company's business. And the end result right now, the preliminary expectation, is that they're not all the surrounding companies that do this type of freight that this company does, they're not going to be able to take everything. So there could be a substantial loss of, activity due to this company going under. And not only that, but there's a few tens of thousands or thousands of jobs that are on the line, or that could get held up. One of the things that I was actually told is that a big, big, big conspiracy theory behind this company going under is that, so a big part behind this company going under is the Teamsters. The Teamsters have been making very aggressive union negotiations with Yellow. And one conspiracy theory is that Yellow has one of the lower pay rates. They have very low compensation for their truckers, and they're unionized. So if Yellow goes under and those people are no longer employed at Yellow, then all those people then get rehired into other companies. The compensation for those truckers actually will go up because Yellow isn't paying them a whole lot, because Yellow is like this 100-year-old company. They were able to lock in lower wages. And then some new companies came around during the 80s and the 90s, and they had to pay higher compensation. So by getting rid of Yellow, it brings up the median or the average compensation for truckers a bit higher, and it makes the Teamsters look better. That's mm-hmm. So I'm really getting into freight. I don't know what it is, but I like the whole idea of understanding how import-export works, just in general. I don't know, it's maybe a guy thing, but I like learning about trains and planes and boats and trucks and how it all interconnects into this giant mesh of a system that actually makes an economy run. I like trying to to understand that. Don't get me wrong, that's effectively saying I want to learn how a supply chain works, but that is effectively it. I want to learn how a supply chain normally functions, because I find it quite interesting. And not only that, but when you understand the type of things that get imported and exported and shipped around and how it gets shipped around, once you have, again, a competency level of how an economy operates, and then some new information comes along that either disrupts part of that economy or incentivizes new activities in that economy, or potentially will boost that economy in that particular sector, you then have a better understanding of like, oh yeah, that totally makes sense why this thing would go up or down, because I actually know what I'm talking about, right? And in truth, you're not, you could look at this chart and say like, oh yeah, and now I understand the trading implications of it. But the truth is that just the more you learn about the world, the more worldly of a person you become in actually understanding and becoming empathetic with the plights and the struggles and the achievements and accomplishments of people around the world and what they're doing with their lives. You'll have a better understanding of what they're probably going to want to do next, or what their current goals are. And then from there, it's a lot easier to extrapolate when you can actually empathize or sympathize with, oh yeah, it makes sense. Like for example, there's possibly big political changes coming into Germany, because it looks like the ADF is about to become the majority party sometime in the next year. The ADF could become the majority party in Germany in the next year. There is a huge thing out. I mean, I can go back to the Discord and show you. There's this geopolitics channel. And here's a link to the Duran. Spain election deadlock. The right gains but underperforms. So the right's also gaining. And then here's that article that shows, hey, the ADF party is on track to become the most popular party. Watching geopolitics and it is another factor of relating with how the rest of the world operates. 5 different risks. I mean, look, the more you just understand baseline how the world works, it doesn't necessarily mean you will have trading opportunities, right? Understanding a lot about the world and becoming a worldly person is just a nice thing to have. So then you can talk to people about something else other than just fucking trading, right? Oh my God. I went through that phase where effectively all I could do was just talk about market movements and economic events and, currency pairs and stocks. There's a point where if you're really passionate about it, you're just totally obsessed about it and you can't talk about anything else. But then, you talk with your friends a little bit, you realize, oh shit, I'm getting a little maybe too into this. For me personally, I really, really like the stuff, but I've figured out a way to morph it into ways that make what I do more relatable with other people. So this whole talk about learning more about the world not only helps you identify risks and opportunities, but it also makes you a more worldly person. So then when you go and you talk to somebody, sometimes people are quite surprised about some of the things that I know about places in the world, because I do a lot of research about a lot of places in the world. So then I'm up to date on different risks, right? Simple as that. Now, however much work you decide to put into that depends on how much time you have available every single day, where you're getting your news. I mean, super simple for you. You just join my damn Discord and look at my posts, and whenever I make a post in the announcements, right? Whenever I do this thing here, go to this post under the announcements and just leave a like on that, because anytime that I'm going over like geopolitics stuff or I'm doing any sort of research, extra research, I'll go ahead and I'll share it here, and I'll post links to like, hey, here are the links if you want to look at this headline more, look at this headline more. And I got to interrupt myself here. We have the ECB meeting in about 20 minutes from now, 15 minutes from now. So, let's maybe switch the conversation over. But in truth, what is there to talk about? The expectation is that the ECB is going to do 25, basically, and that's it. There really isn't anything else to anticipate. Hold on one sec. I got a text here. Don't you know I'm streaming? Don't you know? Don't you know I'm a Canadian, eh? Eh? How about this? I'm going to go over and cover the 2 trades that I opened the stream with, which was euro dollar. I'm going to go ahead and cover those trades. So there was this trade here at 1070, which was based off the weekly pivot probabilities. I'll go ahead and hide those. So we, at the beginning of this week, looked at pivot probabilities, identified this as a probable low. I went ahead and bought that. I immediately stopped out of it. And then once we got down here, I was actually streaming when we were trading down here. And I was like, oh man, yes, I should probably be buying that. So after the fact, right, which is right here, that was where I would have wanted to buy. I ended up getting along somewhere around here. Or somewhere around here. I don't have my thing set up. But I got along here, and I got along here, and I'm currently up like 70, 80 pips. And that's all well and good. And with the expectation that the ECB is going to hike again, what I'm really looking forward to now is getting to like 112 potentially. More specifically, though, I am looking at next week's odds. So let me just add those back real quick. Turn all those things back on. And so work with me on this logical plan here. If I'm buying a low, I want to sell a high. If I don't think we're going to go like way up to like 112.50, I think we'll just go up here into like the sub 112s. We'll probably close out here is my baseline expectation. But even in that case, if let's say we don't even get that, let's just say we go up maybe to 1170, 1160. That's where let's say we close this week around the weekly central pivot based off this one more rate hike. Well, then somewhere around 112, these pivots will shift up as price also shifts up, right? Because these pivots are based off these calculations, and we still have about 36 hours of trading left to do in this week. Oh, hold on one sec. There we go. Don't worry, you guys didn't miss anything. So, just as a summary, I think we'll probably end up closing around the weekly central. These pivots will shift up, and that means these probabilities stay the same, but the pivots that we're targeting go up. So somewhere above 112, there's probably a shorting opportunity. That's what I got boxed right around here. I should probably change that to red. So I'm looking to grab a short sometime around here next week probably. That's what I'm looking at. And I think there's a month setup. Yeah, somewhere in this area here in the upper 112s potentially. Yeah, I gotta be real freaking careful. But between August and then the next meeting is in September. The question is, how does the inflation data look for Europe coming out in August for July? Is it down significantly? Is it not? Whether or not we'll actually get another rate hike is very, very, very dependent on inflation. And if rates actually do, if all these rate hikes coming out here in July are the actual peaks, then there'll probably begin to be this positive US dollar drift that starts to realize itself coming in like the later part of September. And now the other trade I put on was actually based off the daily range probabilities. I was looking at this high data here for range probabilities. I can even probably pull it up on a 1 hour here. No, go back to a 2. Yeah, James, thanks for the message. So this is what I'm looking at here. All right, so this red that you're seeing is just a distribution of high returns. So generally speaking, here's your probability, all these little tags. And I'll even zoom in here so it's a little easier for you guys to see. See how you got these little tags with percentages? So these tell you, okay, between these two prices, here's your probability of getting your top. So this is a distribution. It's actually showing you, okay, here's your distribution of where your tops for the day show up. Well, how high is the highest high for the current trading day? And this is using 5,000 2-hour candles. I wonder if it'll let me simulate more. This loads so much damn data. I would not be surprised if this just conks out on me. Oh, there you go. So that's all well and good. That works fine. So right around here is where you start to see this cutoff, right? So you see how you have these high probability areas right here in this dark red. And then you have a bit of a dimmer red, so your probabilities start to go down a bit. And then this really, really, really dim red. And you can look at the probabilities here on the right-hand side and see how the probabilities are like less than 0.5%, like they're 0.2%, 20 basis point probability. So this is all your tail risk. This is all, you know, going to the moon scenario, tail risk. So by looking at this, we can say, okay, roughly around this area here, if it doesn't top off, you're going to infinity and beyond, like Buzz Lightyear. So I was looking at this roughly around here, right? Roughly around here. And I got timestamps on actually taking this trade too. And I'm so surprised. I mean, I didn't get stopped out of it yet based off this one movement because the spread, the damn spread. I was like 2 or 3 pips off in the spread. Anyways, so the high was likely to come in right around here, or it was going to tail off into infinity and beyond. So I put in like a 13 pip stop based off these probabilities. And so far, So far, so good. And this is actually a long US dollar trade. So this is a nice little bit of diversification and hedging for the euro US dollar. Long trade, you see? So as this trade goes up, but because Australia is done hiking, you're now seeing some negative drift here. Some dollar strength coming in. So this was from the rate hike, this huge move. Actually, no, that was this move here. This was from the June rate hike. Come down here, double top. We can actually go ahead and reason why I was going short here. We can hide all this stuff. Oh, yeah, and that's the negative seasonality. Yeah, the seasonality is quite horrid for the month of August. So it's another reason to be short. And the yield spreads are getting more negative compared to yesterday's stream. Yield spreads are getting even more negative. So that means more people are exchanging their Australian dollars for US dollars and buying US bonds. That's one way to think about it. And the reason why they would do that is because they're collecting a bigger interest rate, a bigger yield on those US bonds, and thus they're able to pay off any Australian bond yield, let's say debt that they have, off with a simple little monetary investment. And that's the spread between the yields. So if the US yield, let's say, is 2%, and the Australian yield for a 2-year bond is also 1.5%, there's a 50 basis point gap between those two-year yields. And that incentivizes people to convert their Australian dollars into US dollars and to buy US bonds to collect that extra relative yield. And so long the US dollar is appreciating or not devaluing significantly to offset that extra yield differential in profit, relatively speaking, then it's a good carry trade. It is another good way to express some sort of carry if you want. So with that in mind, when these bars turn red, it means that yields are getting stronger and higher relative to the Australian yields. And when you see green here, it means yields are moving more strongly in favor of Australia. And so people probably want to put their money on Australian dollars because on a relative basis, the Australian yields are catching up. So you might want to, hold Australian dollars. So there's a pretty good relationship here. Pretty darn good relationship. Look at that thing. Just keeps it down the whole way down. Now, this indicator is not perfect, but I'll tell you what, it can definitely keep you in on some awesome swings. Some assets have better performance on yield spreads than others, simply because more transactions in that currency are done alongside bonds and they respect the change in yields more significantly. Australia does to an extent, but it's not the most sensitive. Euro dollar is a pretty sensitive one to yield spread changes. I mean, it's pretty darn sensitive. You can very clearly see, like, as soon as this thing starts going red to green. So red to green, to green, 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 to red, 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 green, 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 red, 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 green, green, green. Well, you had green and then red for this little pullback, and then green, green, green up here. And yeah, there you go. Now you're saying a little bit of red, and the short-term yield spreads that we analyzed from yesterday. See how those shorter-term yield spreads from yesterday, if I use this replay function, we have these green boxes here. Yesterday I was looking at these boxes and I'm like, on the short term, this actually looks like a relatively good dollar short trade. Given so long our macroeconomic information comes out nominally, this is actually relatively good short trade, especially with the central bank meetings that we have ahead of us. Going forward one step now, you can see that now we have even bigger green boxes here. So the yield spreads over the last 2 to 3 days are now moving more in favor of the euro. And it'll probably flip to white, go a little higher into the upper 112s, probably give you a double top. I would, if I had a little crystal ball, what I'd assume is that you'd see some momentum divergence. So you have a higher high and a lower high in momentum. I don't know if I would trade that, but it would be, now that I said it, if it actually shows up sometime around I think my timing that I mentioned yesterday for shorting euro dollar optimally at a 113 high or a high 112 handle would be sometime around Tuesday of the second week of August. So Monday, Tuesday, that would be what? That's about 12 calendar days from now, 8 trading days from now. Oh yeah, and about 30, 45 seconds from now, we have the ECB rate decision. I'll turn on Financial Juice so we have them on in the background. So if you hear other people speaking, it's not me. It's financialjuice.com. So let's go down to a 1 hour. Oh, hold on 1 sec. Gonna load that one.
10 seconds. Hike, 25 basis point hike, 25 basis point hike as expected. ECB deposit rate hike, 25 basis point hike, 25 basis point hike to 3.75% as expected.
And no movement so far.
ECB says the ECB also decided to set the remuneration of minimum reserves at 0%, with the ECB also saying in particular its interest rate decisions will continue to be based on its assessment of the inflation outlook in light of incoming economic and financial data, dynamics of underlying inflation, and strength of monetary policy transmission, with the ECB further saying that ECB's futures decisions will ensure that interest rates will be set at sufficiently restrictive levels for as long as necessary to achieve a timely return of inflation to a 2% medium-term target. The ECB further says this decision will preserve effectiveness of monetary policy by maintaining current degree of control over monetary policy stance and ensuring full pass-through of interest rate decisions to money markets. The ECB further says, as concerns PEPP, ECB intends to reinvest principal payments from maturing securities purchased under the program until at least the end of 2024, further saying that at the same time it will improve efficiency of monetary policy by reducing overall amount of interest that needs to be paid on reserves in order to implement appropriate stance. They further say, accordingly, interest rate on main refinancing operations and interest rates on marginal lending facility and deposit facility will be increased to 4.25%, 4.5% and 3.75% respectively, with effect from the 2nd of August 2023.
All right, thank you very much.
ECB further say that the APP portfolio declining at measured and predictable pace, and that inflation continues to decline but is still expected to remain too high for too long.
That's a big one.
The ECB further say that inflation is still expected to remain too high for too long, going on to say the Governing Council's future decisions will ensure that the key ECB interest rates will be set at sufficiently restrictive levels for as long as necessary to achieve a timely return of inflation to the 2% medium-term target.
I don't know.
ECB further saying that Governing Council stands ready to adjust all instruments and that PEPP reinvestments to run until at least the end of 2024. Further saying that developments since the last meeting support the expectation inflation will drop further. More from the ECB here, saying that details of the change to the remuneration of minimum reserves are provided in a separate press release to be published at 3:45 Central Time. They further say that we will continue to follow a data-dependent approach. ECB further say that we are to ensure future PEPP roll-offs won't interfere with the stance. ECB also say the Governing Council will continue to follow a data-dependent approach to determining the appropriate level and duration of restriction. ECB further say, but inflation will stay above target for an extended period.
This looks bullish to me. I don't know about you guys, but this looks bullish to me. I know you're seeing a red candle, but when I go and I read all these reports coming out here, ECB is hawkish. This is a hawkish layout of all this news. Inflation is still expected to remain too high for too long. That's hawkish. And that'll likely give...
And also noting some weakness in the euro here.
Yeah, there is. Yeah, we can see that.
Also noting 10-year German Bund yield trades 4 basis points lower at 2.413% versus 2.434% beforehand.
Yeah, look, they're mentioning yields.
And again here, euro trims gains after the ECB raises rates by 25 basis points as expected. Bonds also extend their gains after the ECB decision, 2-year German yield falling 7 basis points.
Yeah, I wonder why the yields are falling. Maybe they're pricing in the rate hike to be in now. Yeah, that's what I'm reading here. With all this hawkish news, the negative reaction, and all these yields are moving against euro. Yeah, sure, while it would be bullish news otherwise to see the hawkish reaction out of the ECB, the expectation that this is the last rate hike.
And we have also posted out the ECB rate statement to the Financial News newsfeed if you would like to have a more in-depth read into that.
Yeah. So in 10 minutes time now, at the bottom of the hour, do get a slew of US data coming in. So we do get the US GDP quarter over quarter advanced numbers for the second quarter, forecasted at 1.8% on the prior 2%, range seen at 3% to 0.8%. Also get the US durable goods number, forecast of 1.3% on the prior 1.8%, range of 6% to -2% expected. The initial jobless claims for the week, forecast 235k on the prior 228k, with a range of 260k to 220k expected. The US GDP price index, forecast at 3% from the prior 4.1%. The continuing claims for the week, forecast at 1.75 million on the prior 1.754 million. And also get the US PCE advanced numbers for the second quarter. Core PCE forecast at 4% on the prior 4.9%. And also core durable goods forecast at 0.1% on the prior 0.7%. Also get the US advanced goods trade balance, which is forecast at -92 billion on the prior -91.86 billion. The US wholesale inventories month over month advanced read, forecast -0.1% on the prior 0%. Also get the US GDP deflator. This is seasonally adjusted advanced number, prior read of 4.1%, and the PCE prices advanced also saw a prior read of 4.1%. Also get US retail inventories ex auto advanced, prior read -0.1%.
This stream is sponsored by TikTok.
Enough with financial juice. Enough with that. Yeah. These yields are really moving against the euro. This is the bond market effectively saying this could be the peak rate for Europe. I don't know if it'll actually like go to like the lower 110 handle from here. But this reaction off this more hawkish ECB reading, and I mean, just based off the information that I'm looking at here from the ECB, it looks like it's more on the hawkish expectation. Again, inflation continues to decline, but is still expected to remain too high for too long. I just don't see the agreement here, but I guess the market really just doesn't believe what the ECB is saying. But I don't know why the market would disagree with the ECB in such a significant way. So I think I'm just going to try and stay put generally in this scenario here where I'm a little confused. Like, hey, ECB is getting more hawkish. And now the bond market is betting against the ECB. It's like, I wonder what's going on here. And this is ideally where you start to realize, oh, okay, I can just wait to make another decision. So I'll look for some analysis coming down my email, my research email. I'll not change my positions dramatically. In fact, I did just add again into euro dollar during this stream here at, what is it, 111.05.8. Call it 111.06. I added again into this here on the stream. Very, very small size, very, very small risk. Because I'm like, you're not just going to hand me free money, are you? You're not just going to zip down and then zip right on back up, are you? Because this is weird, a weird reaction. And I wouldn't mind being wrong on a 10 basis point position. I wouldn't mind being wrong on it. But if my intuition is correct, I wouldn't mind making like 30 to 40 basis points off of a little small guess for a single day. 0.4% on a day is pretty good. But, one step at a time here. Well, I guess now if you guys have any particular requests, because now that the stream's died down a bit and we're done with the major macroeconomic event, if you want to make any sort of analysis request for any of these assets, go on right ahead. And I'll go ahead and break down some analysis for stuff coming up ahead here. Let's see. It doesn't look like anything else is really moving. Let me check out the other euros. Yeah, a lot of these euro pairs are still moving a lot lower. Yeah, a lot of these euro pairs got hit hard again. Euro Aussie, though, Why? Yeah, Euro Aussie yields though are moving quite positively. There might be an opportunity there. Yeah, the yield spreads are still going up here on this one. What are our monthly pivot probabilities? What is it? R1? Are we just range bound here? Euro CAD and Euro New Zealand? Sure. Yeah, bullish range. That's the only one lighting up green there. Check out Euro CAD for the week. Oh yeah, I think we bottomed out right here, right? Yeah, there's your probability weighted pivot low. The yield spreads do look like they got a bit of a negative hit. I'd probably want to buy again sometime next week below S0.5, right? Around this next week's probability weighted pivot. And then take it for a long, because 89% of the time, the top for next week comes in above R0.5. So I would prefer to stay on the long side on Euro CAD next week. All right, and then what is it, Euro New Zealand? So downside here, it looks like, yeah, more the same thing. Bullish range bias for next week. 88.89% of the time you go above this R0.5 weekly pivot. So I'd be careful getting super short here. I mean, I'd have some baseline expectation for a short to occur over maybe the next 48, 72 hours, right, over the next 2 or 3 days. But then going into Tuesday into the end of next week, so next Tuesday into the close of next week, I'm expecting something along the lines of this. Like way up there. Do 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 do. Wow, looks like Euro is really getting hit on the Euro dollar side of things. That's why you listen to your yield spreads, guys. That's why you listen to your yield spreads. That negative yield spread reaction, even though the news was on the hawkers side, it's like, don't try and bet against the smart money there. Do, 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 do. Yeah, what a dump. What a dump that just happened here. So the baseline expectation that I have is right now I'm waiting. I'm waiting to either be proven wrong or for this thing to rebound. Because I have this baseline expectation that will continue up into the end of this week. But based off the reaction to this rate hike, it seems like the bond market is pricing in the top for the ECB rate here. Like, this is a pretty definitive move, guys. Okay. Pound yen, it's doing a whole lot of nothing. Oh. Alert on DXY. DXY is making a new high. Again, I'm expecting still some more pullback here. Probably just a range-bound week next week on the DXY. Yep, up here and then down. So maybe we see something like this going on. That is if we continue getting US dollar strength into the end of the week. Otherwise, if this thing goes sideways and reverses, then it's going to more or less look like this. Be the reverse of that. So if we continue going up for the next 36 hours here on the dollar, I would anticipate the opposite, right? Up here first and then down. But in a scenario where we range effectively here below the 101 level, then we'll probably continue lower, make some kind of new low in the week below this week's low, and then pop off into the end of week come Thursday. Well, come essentially the opening of August. But I don't know how aggressive I'd want to be right off the bat for the month. But you know what? If the opportunity presents itself, I'll be there. Let's go ahead and look at the US dollar move here. Yeah, this still net looks like the dollar is going to get weak. I still haven't really changed my opinion here. So it'll get weak probably for the next few trading days. And then get stronger come Tuesday. Turnaround Tuesday. So this is trade planning for next week now, and going into the first week of August. Yeah, and that could be a real big turnaround depending on the asset you pick. Yeah, that could be a real big turnaround. I might want to try and skew long US dollar come Tuesday. Let's try and look at which assets would be optimal for shorting against the US dollar. It doesn't look like it'd be up. These indices are inversed. So up is a weak Aussie dollar. So yeah, Aussie dollar would be a potential caller. How about New Zealand? So down is a stronger New Zealand. It's a bit counterintuitive, I know. New Zealand could really pop off if it moves particularly high or moderately, depending. So it'd be best to have some exposure, I think. So I'll go ahead and try having some exposure, but I think I'd reduce the exposure considering it's either it's effectively split between getting a really huge move or just a moderate move, compared to a bit more of a consistent probability around getting R1 here. So I think maybe a bit more size on the Aussie for myself than New Zealand, but New Zealand could pay off particularly great. There could be some more weakness in store on the pound, but I don't think too much more weakness on the pound. For the Canadian, though, Canadian got a whole lot of strength here. And, you know, if it does get weak, it could probably be one of the weakest of the G7. If it actually goes to, like, yeah. If you get a move, a continuation like this, on my little equally weighted currency index here, going down is a strong CAD. And if you move below that S0.5 week, I view that as a good buying opportunity based off these odds. And then I would want to take that from a low here and, you know, either it could go up here 25% of the time. Your top for next week comes in below the R0.5 weekly pivot, or it could come in somewhere above R1. The bullish range bias is the only one that works. Like, what is that? So it's something like 71. It's somewhere between 70 and 69% of the time. Your top for next week on this CAD could get very, very weak, is what I'm trying to say here. You could get a very, very, very weak Canadian if the stars align. And I'm going to have some margin aside, just in case the stars do align. As far as the euro goes, again, I think it'll probably continue strengthening from here into the end of week. It seems like this is a lower volatility week. Yeah, this is definitely a more range bound week. So I'll just draw my bias, what my expectation is here. So it's something like this. Again, I think I'm going to have to redo all these indices, right? So then down actually means weakness for the currency and up actually means strength for the currency, because I think this might be a little confusing, where down is the euro getting stronger and up is the euro getting weaker. So this is actually a bearish trade plan. Yeah. So I think I'll spend some time doing that. Expect the BOJ does nothing Friday and pound goes up. Yeah, pound and euro next week look relatively rangy. I mean, don't get me wrong, based off what I'm showing here, it looks like, oh, you know, all these currencies are probably going to get super weak next week. But that's where you buy these indicators and you go ahead and you check each individual currency that you want. Because all you got to do is learn how to do these interpretations, and you can make trade plans for any asset you want. Like for pound stuff, this is collapse these watch list things. So here's the pound stuff. Here's pound yen for next week. You can see the yield spreads are actually getting less bearish. So here's all the red bar, red bar. Let's actually look at the daily yield spread here. Daily yield spread actually on the short term is improving. So that's good. Pound yen for the month ahead could probably move up into the 183s. So the 183s for the month. Yeah, so you could have like an up, down, up, and then down for the rest of the month. Something, if I could get the path drawing tool, something like this, that could be one potential setup. Let's look at the lows for the month. Yeah, those are some pretty far lows. 178. Yeah. The upside, yeah, and then look, the bearish range bias is flashing green. The bullish and the bearish range, yeah, all this stuff is, yeah. So something like S1 going just below the S1, like in the upper 187 handle, just below 179. Yeah, I'd stay bullish pound yen for like the first week or so into August, like from here into maybe the second week of August. And then it'll, you could potentially take it down now. There's nothing saying that it can't just go sideways here and then plummet. This is just the nominal baseline expectation that I have based off interpreting these indicators, right, on pound yen. For the immediate next week, right, it's like you go up to here just above R1. Yeah, man. A lot of lows above S0.5. So you could effectively open, get a little bit of a move down, and then spike up. It looks like next week is pretty volatile, though, in all seriousness. So because we have this Bank of Japan meeting on Friday, not everybody will be able to trade it. So they'll wait for the Bank of Japan meeting to conclude. They'll do their analysis over the weekend, and then they will, over the first couple of trading days of the next week, they will begin to position themselves based off of the new information from the Bank of Japan. And that sounds quite reasonable. And if the Bank of Japan is expected to hold their policy exactly the same, then the yen will probably get weaker. And that sounds incredibly straightforward. Yeah. God, wasn't that a smart idea? That short trade on here, so that's the long dollar setup, which just hit its take profit, which is great. And then having the longs here, those are nice and hedged out due to the Aussie dollar trade. So on the day, I'm still up because I haven't been stopped out of this thing yet. Although I definitely have some expectation that either this thing's gonna effectively bounce over the next 2 hours, or I'll probably have to close this trade early just to protect myself, minimize small, net, I'm still up 14, 15 pips right now on euro dollar. Right, if I go down to here, I'm still up on this trade because I got another trade in suboptimally over here. So yeah, this trade isn't stopped out yet. This trade's still in profit. I'm still net up. But this trade's effectively taken care of me for the day. That's the whole point of hedging stuff out. So yeah, all good. I think I did a good job trading today. I'm going to go ahead and I think from here. So if you guys want to hang out with me, talk over some trade plans, I'd appreciate it. I'll be here in the Discord under the trading room. So I'll watch Eurodollar over the next couple of hours. If you guys want to go over some more charts, we can go over some more charts. If you want to go over some research, we can go over some research. If you want to talk about my trade group and learn about these indicators some more, we can do that too. But with that all said, I'll see you guys in the stream tomorrow, which I think will be the last stream for the week. Yep, because tomorrow is Friday. Same time every day. You can always get your notifications here by subscribing, putting on the bell, joining the Discord, letting me at everyone you. And yeah, if you're in the trade group on Friday or Saturday, I'll be posting a weekly trade plan video, which is going to contain some month ahead outlooks. And then I think I got something special in store. I gotta figure out how to present it, right? And if you want to find out what that is, I'll tell you in the trading room if you hop on in. Alrighty, you guys. I think that's everything for today. It was a very chill day for me. Managed all my risk. I'm net up on the day. And those last couple of trading days, I had 2 or 3 losers. I've now paid them all off with just literally these two trades. Even with this Euro-dollar trade that's in drawdown, it's still doing a-okay, and it's not out yet. So gonna go ahead and give it a little bit of time. We'll see how it goes. Again, if you want to hang out, come hop in the Discord, and I'll see you guys in a bit.